Ladies and gentlemen, good day and welcome to Q4FY25 earnings conference call of IIFL Capital Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. R. Venkataraman, Managing Director, IIFL Capital Services. Thank you, and over to you, sir.
Thank you, and good afternoon, and welcome to the Q4 FY25 analyst call of IIFL Capital. I am R. Venkataraman, Managing Director and co-promoter of IIFL Capital, and I'm accompanied with Ronak Gandhi, our CFO. We are living in volatile times, and heightened geopolitical tensions continue to be a significant near-term risk. Macroeconomically speaking, India is still on a strong wicket, but geopolitical risks remain a concern. As you know, IIFL Capital is a focused Indian capital markets and wealth management financial planning player. Our legacy business was retail broking, and we are on way to transform this to a wealth management practice with a focus on asset accumulation and not merely transactional income. To reflect the change focus, the name of the company was changed from IIFL Securities to IIFL Capital Services Limited. We believe that we have all the pillars to successfully transform the legacy broking business into a wealth practice, be it brand equity, 2,500 crores of net worth, distribution reach across India, a critical cutting-edge research, as well as technology for high-quality user experience. To facilitate this transformation, we recently hired Raghav Gupta and Prakash Bulusu. They have taken charge as joint CEOs to grow this business. They are experienced private bankers, and prior to joining IIFL, they have long careers with ASK Group in the private wealth business. The initial signs of this transformation are encouraging. The other update is that Nen Kumar joined IIFL Capital in June of 2007, and was the founding member of the institutional equities business. Under his dynamic leadership, IIFL's institutional equities, comprising institutional broking and investment banking, has scaled up extremely well over the years. Given the current focus on affluent wealth business and to have this focus on business development, he has been redesignated as Chief Growth Officer, and the board has accepted his resignation from post of Managing Director. Subsequently, I have taken charge as Managing Director in the month of March. Ms. Rekha Warrior, Independent Director, has been appointed as Chairperson of the board. This ensures the roles of the Chairperson and Managing Director are separate, which is a good corporate governance practice. She has been associated with the company since 2019 as an Independent Director, with over 30 years of experience in Reserve Bank of India. She will provide the company with invaluable guidance on corporate governance, regulatory compliance, and other initiatives. Coming to the results, for the full year, consolidated results for FY25, revenues was 2,567 crores, which was up 15% year on year. First, I'll talk about the full year number, and then I'll talk about the quarterly number. Coming to the full year, total institutional broking and banking, the revenue was virtually flat compared to last year, more or less at about 640 crores. And retail brokerage was up marginally at about 650 crores. And this retail broking has been impacted for the last quarter because of regulatory changes related to expiry of derivatives, and that has affected the F&O business. And of course, market volatility in the JFM quarter also affected business. Distribution income, that has increased from 387 crores to 500 crores, up 32%, and mainly because of increased focus on asset allocation, which was a key focus area. Other income was up significantly, 132% from 70 crores to 162 crores, and that was primarily because of mark-to-market gains on BSE shares, some investments in AI, and also gain on sale of real estate property. We booked a profit of about 45 crores as because of gain on sale of real estate. Increase in interest income by 27% from 329 crores to 419 crores was primarily because of increase in the margin funding book. Coming to cost, manpower cost was up 29%, which was at 591 crores from 457 crores, and that was primarily because of hiring of the new wealth RMs, and as a result, the average headcount was up to 232 versus 1880, and also we had granted ESOP of almost 90 crores to senior management. Depreciation declined by 52% from 114 crores to 55 crores, and that is, if you remember, last year, fourth quarter, we had written off the entire investment we had made in Carby acquisition, and because of this, it has fallen down. Fees and commission expense increased marginally from 477 crores to 496 crores, mainly due to increases. Basically, this expenses pass out marketing expenses paid for customer acquisition to external wealth partners for distribution income. Admin costs decreased 9% from 353 crores to 321 crores because of marginal benefits of cost optimization. And as a result, profit after tax went up almost 40% from 513 crores to 713 crores. Now coming to the quarterly numbers. For the quarter ended March 31, 2025, if you compare March 31, 24 with March 31, 25, which is year-on-year basis, total revenues decreased 20% approximately from 704 crores to 573 crores, primarily due to fall of exchange volumes due to tightening of norms for derivatives expiry as well as muted primary market conditions. Institution and as a result, institution and banking revenues also decreased from 215 crores to 97 crores. And because of which our IB income has seen some decline. Retail brokerage was down from 194 crores to 117 crores, but distribution income increased by almost 62% from 117 crores to 190 crores. Other income also increased from 18 crores to 36 crores, mainly because of mark-to-market on investments made in AIF and BSE, and as well as some book profits on the other financial instruments. Interest income declined marginally from 105 crores to 97 crores. Employee expenses increased 33% from 122 crores in last Q4 FY24 to 163 crores in Q4 FY25 due to ESOP, increase in headcount and bonus provisions. Depreciation fell sharply from 75% from 63 crores to 16 crores, mainly because of the impact of Carby hit we had taken in last year, and that I've already spoken about it earlier. Fees and commission income fell from 129 crores in Q4 FY24 to 108 crores in Q4 FY25. Admin also fell from 98 crores to 80 crores as a result of some cost optimization. Due to this, primarily driven by the revenue decline, the PAT fell from 181 crores to 128 crores in Q4 FY25. If you compare December quarter with March quarter, revenue again fell 646 crores in December to 533 crores in March, down 11%. Institutional broking fell, and that was primarily driven by a steep decline in investment banking income. And then retail brokerage also fell from 150 crores to 117 crores, which is down 23%. Distribution income increased because of more focus on selling, more focus on getting cross-sell income. Interest income fell from 111 crores to 97 crores because of a relative decline in the MTF book. Employee costs increased 149 crores to 163 crores, mainly because of headcount and bonus provisions. Flattish depreciation. Fees and commission income was also virtually flat at about 118 crores to 108 crores. Admin expenses increased marginally from 71 to 80 crores because of spending in marketing as well as technology. As a result, PAT declined from 197 crores in Q3 FY25 to 128 crores in March quarter FY25. Now, coming to some housekeeping numbers. Our average daily turnover was 1,92,871 crores in F&O, which was of which cash was 2,535 crores and derivatives was 1,90,336 crores. And this was almost 3 lakh crores in the Q4 FY24. And as I explained earlier, this was because of the tightening of derivatives norms, particularly related to expiry of indices. And F&O was in March 31, 2024, F&O volumes were 2,96,975 and cash was 3,120 crores, which was down almost 36%. And the same number was 2,78,267 in the December quarter, which was 2,75,520 in F&O versus cash of 2,747, again down almost 30%. Now coming to income tax, the income tax authority had conducted search activity during the month of January 25 at the registered office and other premises of the company. We extended full cooperation to income tax official during the search and provided all details, clarification documents. We have not received any subsequent communication from the department regarding the outcome of the search. Hence, the impact on financial statements, if any, is not determinable. Dividend, the board of directors on February 11 declared dividend of rupees 3 per share. And this has been already paid, and the same was considered as final. And with this, I come to the end of my opening remarks, and we'll be more than happy to answer any query that you may have. Thank you so much.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. I repeat, if you wish to ask a question, you may press star and one. A reminder to all participants, if you wish to ask a question, you may press star and one. We have our first question from the line of Nidesh from Investec. Please go ahead.
Thanks for the opportunity, sir. Can you share some trends on the retail ADTO market share for us in FY25 over FY25 last 2 to 3 attempts? That is one. Second is, as we are now changing our strategy and building more towards wealth management, can you speak about how the approach towards business will change as we move towards the wealth management business and away from a broking business?
Sorry. Okay, overall market share for Q4 FY25 was about 0.96%.
Including?
Sorry, no. Overall, total on an NSE volume, and which was about 2.62 in cash and 0.96 in F&O. And the same was about virtually flattish for Q3 FY25 at about 2.61, and actually F&O was about 0.87%. So the trend is more or less the same if you look at the last 3-4 quarters. The cash is more or less roughly at about 2.6, 2.7%, and F&O is about 0.8 to 0.95.
Is this data including institutional business as well, or is it just for retail?
Everything.
Okay. And how are the trends on the retail business, if you can share that?
See, retail, I don't have things separately on the retail part of it, but I'll get back to you on the retail market share.
Sure. And secondly, if you have to share with the change in strategy and moving more towards wealth business, how will that change the approach towards business? Let's say, how we look at the customer level profitability or overall profitability in that context?
See, basically what we think is that if you look at the way we are positioned, so if you look, we have a significant presence in investment banking and institutional broking business, and we think that this is a synergistic with our wealth practice because if you have client relations at client level, you have multi-level offering to the client, which helps us to deepen market share. It helps us to get deal origination as well as cross-selling. It helps us to overall drive it's a synergistic benefit on the franchise. We also get some benefit on economies of scale, and also we share a lot of market intelligence and research. And the way historically we have been structured or we have been positioned is that we have focused more on transaction income. And the entire firm was driven for, I would say, with a focus on transaction. And asset gathering was not a very, I would say, was not a measured metric. So the big shift, I would say, in the mindset is that the focus will be more on asset gathering, focus will be more on selling, I would say, annuity products like mutual funds, AIF and PMS. And so basically, we believe that the entire broking industry has become tech-driven, and hence the role of the RM is more towards client acquisition, servicing, and asset gathering. So this, I would say, is the big mindset change that will happen in the next 12 months.
And will that have an impact on the cost-to-income ratio for us?
Yes, of course, it will have some impact on the cost-to-income ratio in the short term, simply because since as the build-out is happening, there will be increase in manpower cost, and that has been evident because our manpower cost has risen. But this is a cost to pay for the long-term gain, and we are cognizant of it, and we will incur the cost.
Okay. And so lastly, if you can share the data in terms of institutional revenue breakup in terms of brokerage and fee income for the full year.
I think the full year income for roughly full year income was about 640 crores for broking for institutions.
Can you break up this 600 crores in institutional equities, broking business and fee income, investment banking?
This is a combination of institutional broking and banking. I think the ratio will be about 60-40, right? Roughly it will be about 60-40.
Okay. Thank you for that from my side.
Thank you.
Thank you.
Actually, if you send, sorry, to that other person, if you send an email now to our investor relationship or honor.gandhi@iiflcapital.com, will answer that.
Okay, thank you, sir. He has gone back to the call.
No problem.
We have our next question from the line of Pawan Kumar, an individual investor. Please go ahead. Mr. Kumar, are you there?
Hi, yeah. So there's a significant jump in distribution income from 100 crores to 257 crores, despite the distribution AUM growing from 262 billion to 313 million. So it's about like a 19.5% or 20% growth in the AUM, but the jump in the revenue is significant. Can you explain how that is? I'm referring to PPT slide number 17.
1 second. Yeah, that is because we have also had some amount of transaction income booked in that, because we had distributed certain shares of certain unlisted shares, especially NSE. So that gain has been booked there.
Got it, sir. Could you be able to quantify the NSE or unlisted transaction income share, and what would be the MF, PMS, and AF distribution?
That actually, I can tell you how much is that mutual fund in AF. It's out of the total distribution assets about 13,000 crores.
Yeah.
We have about mutual funds of about 14,500 crores, and more or less roughly about 7,000-8,000 crores of PMS and AF, and the rest is fixed income bonds. So this is a rough distribution of the assets, cross-sell assets.
Got it, sir. So what would be the revenue or the yield on these MF plus PMS plus AIF assets?
Actually, on a blended basis, I think the yield will be about 0.75, 0.8, 0.9 times.
0.75 to 0.8% would be the blended yield. And so on the insurance side, you have about the income that, not the income, I mean the reported premium that you have reported, like the life insurance premium is around 735 crores. Is this entirely first year premium? If so, what would be the revenue?
Sorry, it is not 735 crores, 73 crores.
73 crores. What would be the renewable? Pardon me, sir, I missed you. What was the renewal premium? Hello? Sir, I missed you. Can you please repeat it? What would be the renewable premium?
So this is not renewal premium, it's a first year premium.
I understand, sir. I understood. What would be the renewal premium is the question.
So I don't have the data right in front of me. I'll share it. I'll share it with you. If you can send an email to ronak.gandhi@iflcapital.com, I'll share that with you.
Understood, sir. I'll do that. And in terms of the cost to income ratio, you were mentioning to the earlier question, what would be the cost to income this year for FY25 and what is your guidance for FY26? Can you give numerical numbers?
We are not giving any forward-looking statement. That's why I won't be able to comment on the cost income ratio for FY26.
Got it, sir. And for FY25 full year, what is the sub-brokerage charges as percentage of overall retail brokerage? Retail brokerage 650 crore revenue, right? Out of that, how much is paid out to sub-brokers?
Actually, of that retail brokerage income, about 650 crores, roughly about 45% comes from sub-brokers.
Okay. Thank you, sir. And
thank you.
So out of this 45% that you get, how much you pay?
So see, the industry norm is anywhere from about 75%, 90% depends upon the scale of the sub-broker relationship and other qualitative factors.
Got it, sir. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask a question. We have our next question from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Hi, good afternoon, sir. So just on this wealth management business, we had earlier seeded 361, we had started this business way back, and we did it via the getting people on board. And similar is the strategy now that we are doing, or what's the strategy then, and where is the RM count today for the ultra HNI piece in particular?
Basically, as I mentioned earlier, that we have all the pillars to succeed because we have the brand, we have the balance sheet, we have the technology, we have the client reach. So, and given the way the broking industry is panning out and what is happening to the entire transaction space, it is imperative for us to do this transformation. And as of now, we have about 450 of the affluent RMs and roughly about 50 for the, I would say, HNI or ultra HNI RMs.
So could you repeat those numbers?
50.
50 in the ultra HNI?
Yes.
Okay. And how many more do we plan to add in the next, say, 1 year or so?
I think in the next 1 year, the headcount will go from around 50 to about 100 or 120.
Okay. And sir, on this insurance premium, life insurance premium has come down quite sharply now. Obviously, we cannot compare it with FY23 base because of the change in taxation at that point of time. But even then, even in YOY basis, even then this year it's kind of down. How do you see this kind of business picking up from here on?
See, actually, we think that this business will not show a big spike, but it should get back to slowly upward sloping graph in the mid-teens.
Okay. And so just one last question on the IB business. How much of the IB business that we were getting earlier was with respect to the relationship that we had earlier with 361, and how much of the business we were doing organically?
See, actually, it's very difficult to differentiate between what was organic and what was relationship driven, because even if you have a relationship, unless you have proven capable to execute, nobody trusts their fundraising plans with you. So we think that we got most of the business on banking part of it because we have a strong research, we have linkages with both domestic and foreign institutions, and third, which is extremely important, with distribution amongst all the channels. Yes, there were references, but I think the deal closure happened because of our own strength. And so hence that is the reason why it's very difficult for me to give an exact number, how much came because of that and how much came because of this.
Got it. And the last question, do you think that the pain on the retail side from broking standpoint is now behind, and that the implications of all the regulations are now behind us? Should we see an upward trajectory if the markets are supportive?
Yeah, my view is that the short term, I would still say that there will be some amount of recalibration happening. But if you don't have a short term, maybe 1 or 2 quarter view, I believe that given the low penetration of equity participation in the country, we will soon, and of course, as you rightly pointed out, the markets are supportive, we should see an upward sloping graph. But at least for the next 1 or 2 quarters, I'm constructive, and I think we should, because of volatility, we should see some amount of headwinds.
Got that. Thank you so much, sir.
Thank you.
Thank you. Before we move on to the next question, a reminder to all participants, if you wish to ask a question, you may press star and 1 on your touch-tone phone. We have our next question from the line of Kshitij Saraf from Tusk Investments. Please go ahead.
Hi, good afternoon. Wanted to understand on the asset management side, you've made a few key hires and you mentioned this in your presentation as well, and we see an IIFL FinTech fund with a 400 odd crore AUM, if I'm not wrong. So could you just share some light on the plans and the hiring thereof, and how much do you look to scale this to, and what's the plan ahead?
See, on the asset management side, actually we have one FinTech fund which has been with us for almost 2-3 years. We also have a derivatives advantage fund, which is again like not exactly a long-term fund, but something similar. And we also have a equity fund which we are going to reposition. So we have already recruited a fund manager for equity, and he joined us. And so at this point in time, I would say that we are roughly about close to about 800-900 crores of assets under management, and this we think should easily double in the next 1 year.
Thank you. That's helpful. And are you planning to launch mutual funds as well?
No, it's unlikely. At least in the next 12 months, it's unlikely. At this point in time, whatever discussions we had with the board, it looks unlikely.
All right. And with respect to wealth, are there any new offerings we saw? There are things such as estate planning mapped out there. What's the size of the opportunity you see? And also, because the competition over here is intensifying across the country, what would be your sort of unique differentiation in this space?
See, first of all, I would say that this competition in India in any business is given, and but what we have to look at is the size of the opportunity, and we are not selling credit cards in Singapore. So that's the way I tell everyone that is the cause of optimism, because India is a vast country, and I think we are just seeing the beginning of this industry and the growth. Coming to what we think are unique, so that you're right that we have started succession planning trust. These are important, I would say, services to be offered to the HNI, ultra HNI segment, and we are also starting a family office offering. So these are I would say essential offerings, especially for targeting the UHNI, ultra HNI segment. And as I mentioned earlier, we think that we have the element of success because we have a brand, we have balance sheet, we have the relationships, we have a critical mass of customers, and last but not the least is high cutting edge research, and the fact that we have a strong banking and institutional equities practice, which effectively reinforces the relationship, because in some case we can help the HNI monetize wealth, and the other case they can also invest. So these we think are maybe the critical elements for our success.
Understood. Thank you. Thank you so much.
Thank you so much.
Thank you. Before we move on to the next participant, I would like to remind all the participants you may press star and 1 to ask a question. We have our next question from the line of Pranay from Johnson & Johnson. Please go ahead.
Hi sir, good afternoon. Thank you for this opportunity. My first question is basically in wealth management piece. when do we means what sort of a cash burn do we expect, and where do we see this management wealth thing in next 3 years?
See, it's very difficult to give a cash burn number because it's a function of team build out, business move, etc. And I said that we are at this point in time we are doing a build out phase. So my feeling is that I think it's very difficult for me to make a forward-looking statement. So the key element to track is how our cross-sell assets grow, and we think that this is the part which should rise. So obviously in the short term, because of people take time to join and become productive, so there will be some amount of burn simply for the employee on the employee cost part of it.
Okay. And sir, my next question is basically one of our subsidiaries has invested in Avanti Feed. They have taken a 4.5% stake. So what is the rationale behind IIFL Capital and IIFL Facilities investing in this?
No. Actually, there's a wrong information. It was taken for selling purposes, and it's already off our books.
Okay, so we don't own any more shares in Avanti Feed.
We don't own any Avanti Feed as of now.
Either IIFL Capital or IIFL Facilities?
In IIFL Capital, IIFL Facilities, or which are the company we have spoke about, we don't have Avanti Feed.
Okay. Thank you so much, sir.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. I repeat, you may press star and 1 to ask a question. A reminder to all participants, if you wish to ask a question, you may press star and 1.
So anyways, people have come to the end of the question. I would like to thank all the participants and for participating and also asking questions. If you have any follow-on questions, please feel free to reach out to our investor cell. And thank you so much for joining us today, and I really appreciate your time. Thank you.
Thank you. On behalf of IIFL Capital Services, that concludes this conference. Thank you for joining us, and you may now disconnect.